Hey, this is Josh. Today is July 10th, 2017. I'm doing this chart lesson a little early today. Not sure if I'll have time to do one later, so go ahead and get out of the way now. Today was a trading range day. Prices opened with the bear gap down, making the market always in short. Quickly tested the low of yesterday and formed a double bottom and a double bottom, micro double bottom here. Yesterday was a sell signal on the daily chart, so I really thought prices would at least test down here and trigger the sell. However, the bulls were strong and prevented that from happening. So today, opened in a small bear channel here. Quickly broke the bear trend line, retested the low. So this was an acceptable swing short for an EMA gap bar. Double top bear flag, failed bull breakout above 3. Was a bull signal bar, so a little risky, but reasonable swing short. This was also a second entry to here, also a nested wedge top. So you got 1, 2, 3 pushes up. Should be good for 2 legs down, which it ultimately was after a small higher high. But I was really surprised that prices reversed up strongly here before making a new low. But so this was also a reasonable swing short for a second EMA gap bar, failed high 2, and nested wedge top. Also a larger double top and a micro double top here. So this was the market almost flipped to always in long here, but the bulls were unable to get follow through. The bulls that bought this close were trapped, ultimately scaled in and were able to get out, but originally they were trapped for a little while at least. So this was a reasonable swing buy here for a larger high 2, also a higher low. Could be considered a higher low major trend reversal from the break of the bear trend line here. There's also another bear trend line in here which I don't have drawn. So I at one point thought this was a bear channel, a gap and bear channel day. It was reasonable to think so, but prices never were able to get down here to test this bear trend channel, so ended up forming a trading range instead. This is pretty interesting. This is something I've talked about before, at least recently. I've noticed that the institutions are scalping for 5 to 7 pips, and they're scaling in that increment as well. So there are a lot of 10 pip failures, at least lately there have been. And you can see, for the first few hours of the day, that's what they were doing. They were scalping for anywhere from 5 to 7 pips. This entire trading range is less than 10 pips, if I remember correctly, 93. Yeah, so the bears were never even able to make a scalper's profit. Maybe the limit order bears who sold above here. Nope, in fact, they did not either. So that's just something interesting, something to take note of. But so I think I was on this entry here. So you had a higher low here, high 2 buy setup, reasonable swing buy. Low 2 sell setup here was into the EMA, and at that it was off the bear trend line. Also along this high of the trading range. So you could consider selling below there, but prices quickly reversed up in a bull breakout, which failed again. So this is also this is a wedge bear flag. So you got you can consider this is the first push up, or either of these 2 pushes up. Or you can consider 1, 2, 3. So wedge bear flag, sell setup, and it's also a final flag reversal and failed bull breakout. So here's a small flag, sideways bull flag, failed bull breakout. So final flag reversal should be good for 2 legs down, which it was, leg 1, leg 2. This is also a small spiking channel bear trend, so a minuscule one. So you got this bear spike and then small bear channel with 3 pushes down, 1, 2, 3 pushes down before the reversal occurred. Prices, I was really surprised when prices didn't break at least below here. So I really thought prices were going to get below yesterday's low, but what was actually occurring was the bears that sold this close, had a huge stop, scaled in, exited, and you can see that they were exiting right around that close. So see, they were trapped out and actually were unable to exit at that close. So this is probably what contributed to this strong rally that's occurring now. So after the wedge bear flag, the EMA gap bar often leads to the final flag of a bear trend. This is also a bull break of the bear channel and then a higher low test of the low with 2 to 3 legs down to test the low. So this is a higher low major trend reversal. It's also a second entry. If I move this out of the way. So first entry, second entry, okay, so it's actually a third entry. You can consider this is the first entry or this one, really doesn't matter. Second entry, higher low, major trend buy setup, reasonable swing buy. This tight trading range yesterday into yesterday's close was also a magnet, so that would have been a reasonable target if you bought here. This was an acceptable scalp, buying below bar 53 for a limit order scalp. If I can get this out of the way. Okay, so a reversal up, bull entry bar, bull follow through, not very strong, but off the bottom of a trading range, so reasonable to be looking to buy. Weak low one after reversal, so you can buy below this bar with a limit order. Buying above here on a stop is a little risky. You're buying into the high. Reasonable to take for a swing, but personally, I probably would not. So this turned into a small by the close bull trend. The bull's got a breakout in an outside bear bar here. It's also a failed low two. That's a bull bar, sorry. Also a failed low two. So first entry, second entry, which it only went maybe a micro pip below the low of this bar, but this was a weak sell signal bar, so it was likely to be buyers below, at least for a test. Probably to fill this gap, maybe test somewhere up around in this area, which it did. So this was a reasonable swing buy, scalp with a limit order, or you could wait for the bull follow through bar, which put the market always in long. You can buy this close for a scalp up, or you can hold for a second leg up with a stop down here. Betting on a measured move up, which we're nearing a measured move up now. There's a couple measured move targets in here. So there's one based on the opening range, which is already been reached. It was reached on that bar. You can see prices reversed exactly at it. There's also a measuring gap. There's a micro measuring gap in here, bar 59. Very small gap, which I think that measured move target's already been reached as well. So that one was reached on this bar, some profit taking. And there's also this larger measured move target based on this gap here, bar 73. Okay, so buying this close is reasonable. Then you got a high one buy set up. Wasn't this bar here ended the buy the close, so buy the close bull trend. Also a small bull micro channel. First break of the bull micro channel led to a high 2 buy setup here. It was an acceptable scalp to buy on a stop above there. You could also, another acceptable scalp if you were not filled on that entry, was buying below this weak low one. So buying below. The bears tried for a failed high 2 here, so first entry, second entry buy setup. Bears tried for a failed high 2 and reversal back into the trading range. Instead, it became a breakout pullback buy setup and a wedge bull flag above here. You could consider buying below this bar, although personally I do not buy below failed high 2s. I do not buy below any type of second entry short. But some traders are more aggressive than I am. So it was reasonable to buy above there. I probably wouldn't buy below there. I would wait, but it was acceptable buy for a scalp. Sorry, Bandicam cut me off at 10 minutes. I'm not exactly sure where it cut me off at. I believe I was talking about this high 2 buy setup. So I would not buy below the failed high 2, but you could consider it since it's into the EMA. Pretty strong buying pressure and weak selling pressure from this reversal. This is a weak reversal, so more likely to become a bull flag than a reversal. So buying above this bear bar, 71, was a wedge bull flag. Could also be considered a high 2 buy setup if you restart the count here. But since it's a bear bar, the better to take is a swing trade. So the bears, this is the reason why I don't buy below failed high 2s. So the bear, you can see the bears tried to sell above this bar here because this was a pretty weak buy setup. So the bears tried to sell above here and reverse the prices back into the trading range, but you can see that the bears were unable to trigger the sell setup, and instead the breakout was very strong on this bull follow through bar here. So you could consider buying this close as a bull follow through bar, but you're getting into the highs of the day on a trading range day, so it's pretty risky to do. So it's not a best entry, but it could be considered a more aggressive, acceptable scalp. So prices are now testing the middle of yesterday's trading range and finding profit taking. This is a possible small final flag for a reversal back down. There's a chance that the bears try for a bear trend resumption day and end up triggering that sell setup on the daily chart. However, at this point, it doesn't look very likely given the strong buying pressure and the weak selling pressure. And the bears were not all that strong this morning either. So that's probably less likely, and instead prices will end up closing somewhere up here around this measured move target for a weak bear signal bar on the daily chart. All right, guys, that's about all there was for today. I'll be back to do it again tomorrow. See ya.